Are you afraid to buy a Florida condo? If you are buying a condo in Florida right now, you are walking into a massive financial trap if you do not understand the new lending laws hitting on August 3rd. Your dream waterfront condo could quickly turn into an absolute nightmare of skyrocketing fees, massive special assessments, and dead deals if you are not working with someone who knows exactly how to navigate this massive shift. Here is the brutal truth most agents aren't talking about. Fannie Mae and Freddie Mac are officially eliminating the limited review process on August 3rd, 2026. For years, this streamlined path allowed buyers to easily get conventional financing without lenders looking deeply into the building's overall financial health. And roughly 40% of condo loan reviews currently use this exact path. Well, those days are over. Starting August 3rd, nearly every established condo transaction will require a comprehensive full review. Underwriters will demand complete reserve studies, tight insurance verification, and thorough litigation checks. If the condo board does not have their current documents perfectly organized, deals will instantly fall apart. But it gets stricter. Lenders are preparing for a massive rule where the minimum reserve funding jumps from 10% up to 15%, while that specific 15% requirement officially takes effect on January 4th, 2027. The elimination of the limited review happens right now on August 3rd, 2026, meaning underwriters are already heavily scrutinizing budgets. Condo associations must base their funding on the highest recommended reserve allocation amount found in their reserve study. And if a building has been scraping by using a baseline funding method, where the cash balance approaches but never falls below zero to keep dues cheap, that method is now strictly prohibited. Plus, if reserve studies are older than 36 months, the building will not pass lender review. In Florida, this ties directly into new laws requiring a structural integrity reserve study, or SIRS, at least every 10 years for residential condo buildings 3 or more habitable stories in height. Associations can no longer waive reserves for structural items. Furthermore, under the 2026 Florida Condo Owners Bill of Rights, enhanced transparency is mandatory. Associations managing 25 or more units must maintain a password-protected website or app to post official records and financial information. If a building lacks these updated studies or falls below financial thresholds, it becomes non-warrantable. Buyers cannot get conventional financing, the buyer pool shrinks, and property values take a massive hit. But there is good news. The old rule capping investor concentration at 50% has been completely retired. Buildings previously locked out because of too many rentals can now qualify again. Smaller boutique condos with 10 or fewer units can now bypass full reviews thanks to expanded waivers. Lenders also now allow roofs to be insured for actual cash value rather than full replacement cost, providing relief on soaring insurance premiums. This is exactly where I come in. I am Irina Telmakova, your luxury real estate guru at Ecofine Properties. When you purchase a condo, you are buying two entirely separate components: the interior space and the association itself. The interior dictates the sale price, but the association's financials totally determine your financing eligibility. Long before we ever submit an offer, my lending partner Matt Weaver and I rigorously investigate the building. We demand the budget, balance sheet, master insurance policies, and confirm pending litigation. We utilize mycondoapproval.com to conduct a preliminary review before you ever incur any expenses. If a building's reserves are critically underfunded, I will tell you to walk away. But when we find the right building, our upfront homework means we sail right through the full review process. We give the seller total confidence our financing is bulletproof and will close on time, giving us massive leverage in negotiations. Stop sitting on the sidelines. Cut the nonsense and make a smart move. Call or text me directly at 561-460717 today.